Hello dear students, welcome to Devika's Commerce and Management Academy. Final accounts, simple final accounts. I taught all the adjustments, but 3 adjustments I forgot. Main simple adjustments just like outstanding rent, depreciation, bad debts, prepaid insurance, such kind of all adjustments I taught you in one video, 1 or 2 videos. So that link is given in the description box and also in the comment box you can find the simple adjustments. The main 3 adjustments which I did not cover in the final accounts. Someone asked me in the comment box, then I thought of covering this one also. 3 adjustments which I did not cover, important also. Basic problem you can work out, final accounts. But when it comes to new difficult and new adjustments, you may confuse. So that is the reason I am covering this topic also. 3 adjustments. Out of this, first adjustment is insurance loss or goods destroyed, and where insurance company is giving full amount or half amount, not at all giving. This kind of cases you will find. This is one adjustment, goods destroyed, and about the insurance case. And second one is reserve fund. This adjustment and goods sent on sample basis. These 3 adjustments I am going to cover. Let us focus on the first one. Here, loss of stock by fire. Goods destroyed by fire or loss of stock by fire. Whenever goods are destroyed, 3 cases you will find. First case is that all the stock is fully insured. Say 10,000 goods destroyed, 10,000 insurance company is going to pay. Are you getting it? 10,000 destroyed, 10,000 company is going to pay. So then it is fully insured. In such cases, fully insured, what do you do the entries? Where do we write the entries? First thing is that in trading account, you will write it on the credit side. What do you write? By goods destroyed by fire. How much? 10,000. 10,000 you will write here. Okay, 10,000 for example, 10,000 you will write here. What you are saying? By goods destroyed by fire. And after that, company is going total amount. You have written here to cancellation of that. In balance sheet you will write insurance from company. Okay, insurance from company 10,000. So this is first case when totally insured, total amount is paying by the company, first case. Second case is that the stock is partially insured, few part only insured, not all. Say for example, total goods destroyed 10,000, insurance company is paying us 6,000 only, paid by company, insurance company. Okay. First thing what we have to do is total goods destroyed is 10,000. Same like here, here also we are writing first trading account credit side. What do you write? By stock destroyed by fire, SD by fire means stock destroyed by fire. Same like here, trading account credit side. 10,000 destroyed. Okay, 10,000 you are writing here. Out of 10,000, 6,000 paid by the company. 6,000 paid by the insurance company. But what about the 4,000? 4,000 is loss. That loss we have to write it in the profit and loss account debit side. Profit and loss account we are preparing to write the losses or profits. Right? So that is why we are writing this 4,000 here. And here as usual 10,000. And 4,000 is company is not paying, loss. Loss we are writing in the profit and loss account debit side. And what about the 6,000 when company is paying to this amount? This will write insurance from company 6,000. Here also when loss was there, destroyed, you have written here. When company is paying, balance sheet asset side. Here also total loss here. When company is paying, balance sheet asset side you are writing. And loss, this is the only entry because few partial amount is paying by the company. This is not paying. Which is not paying, profit and loss account debit side. Now third case, this stock is not insured at all. Means company is not paying, insurance company is not paying at all, not insured. In such cases, as usual, by trading account, by stock destroyed by fire, 10,000 will write. and company is not paying at all, so there is no question of writing in the balance sheet. Company is not paying. Total 10,000 is loss. Loss means profit and loss account debit side will write. So this is the treatment of fire, loss of stock by fire, okay, or good destroyed by fire. Any of such three cases, remember. Let me give you once again easy way to quickly to remember. One thing is that whenever goods are destroyed, whether insured, not insured, partial amount paying, whatever it may be, first thing is that we'll write it in the trading account credit side. What do you write? Stock destroyed by fire. Any case, stock destroyed by fire, stock destroyed by fire. Trading account debit side you will write. If company is paying total amount, balance sheet, asset side you will write. Partial amount company is paying, how much is paying, that will be writing in the balance sheet, asset side. Which is not paying, loss, profit and loss account debit side. And here company is not at all paying, there is no question of writing in the balance sheet. Entire amount 10,000 is loss, so profit and loss account debit side we have written loss. Able to remember? Important. And another adjustment, reserve fund. Sometimes reserve fund is given in the adjustment. Adjustments means two times we have to write. One time we are writing in the profit and loss account debit side. Why we are writing on the debit side? Reserve fund is taken from the profits only. As you know, profit will be showing into the profit and loss account debit side, right? So in the same fashion, this reserve fund also will be showing on the profit and loss account debit side along with the net profit. Okay. Second treatment is that balance sheet we are showing it as a liability. Why as a liability? All the reserves will be always on the balance sheet. Investment like preference shares, equity shares, capital, all these things will be on the balance sheet liabilities. Also reserves also, right? So that is why this is a reserve fund. So will be showing in the balance sheet liability side. Am I clear? Now if it is clear, now third adjustment, goods distributed as free samples. It means few goods, say 100 or 1000 goods, I wanted to distribute it as a samples so that customers will come to know what is my product, they'll get to know and they'll use the product. So just for advertisement purpose, we'll be sending some goods, we'll be selling some goods as free sample. We'll be sending some goods as free sample. Means what do we do? First thing is that two treatments. When this is given in the adjustment, two treatments. First thing is that from trading account we have to deduct it from the purchases. Why to deduct from the purchases? Few goods are distributing as sample, means from the purchases whatever we have purchased, few goods are distributing as a sample, means purchases are decreasing na. So that is why we are deducting from the trading account purchases. Second treatment is that profit and loss account debit side you are writing. You are writing. Why we are writing? Freely distributing. It is just like advertisement. I am advertising these products to the customers so that they may accustomed and they may get introduced, they will come to know about the product. This is like advertisement. So that is why advertisement is always expenses, you know. So that is why profit and loss account debit side you are writing. Free distribution of samples. Able to remember? Logic you have to remember, don't by heart. Why we are writing? Logic if you understand, need not to by heart at all. Forever in your life, you will never forget this concept. Am I clear? Final accounts. If any more doubts, please write it in the comment box. Let me know your feedback also. There are many subjects which already covered in our channel. Please use it. Don't forget to share this video. See you in the next video with another interesting topic. Till that period, practice well. Good luck.